Closing Table with Loans by Katrina. I'm glad you decided to pull up a chair because you do not want to miss this conversation. Today, we are talking about the good, the bad, and the credit score. Not my score, but your score, our score. What makes it up? What makes us tick? What makes us uncomfortable about talking about it? What makes us try to hide all of the things that contribute to this credit score? And I wouldn't have this conversation with anybody else other than my sister, my friend, none other than the credit queen of the South, Miss Tye Burton. Hey, girl.
Hello.
How you doing today?
I'm better than amazing in yourself.
I love it. I'm better than terrific and better than I deserve to be. How about that one?
Awesome.
So, Ty, we have spent over 5 years helping families navigate credit and home ownership together as a team. And one thing that we have learned about this process is people don't fail because they don't care. They often fail because they don't really know where to start. And that's where the big sisters, you and I, come in, giving them the information and that confidence to move forward. Would you agree?
I agree. Lack of education is really the main source of bad credit.
And the funny thing about it is, some of the people who I talk to, be it 24, 23, or 50 or 70, one thing about it is it does not discriminate. So, why do you think there are so many good people out here in this world who are embarrassed to talk about their credit?
Because they feel that their credit score is a reflection of them. It does bring some things to light. It either shows bad habits or lack of education. And who wants to be known for that?
Come on now.
So it's just all about when you really want to be in a position to learn more, and when you learn more, you grow. So that's the main reason why most people do not want to talk about credit. And another reason why people really don't talk about credit, because you only talk about it when you need to use it, you
Come on
know.
now.
So it's like one of those things like, oh, I pull my credit when I need something. But you have to understand you have to also build it as well so you can be prepared for whatever it is you're pulling your credit for.
Big facts, because most people, when they're coming to talk to you and I on the home ownership stage or landing page, everything is, I need it quick, I'm ready right now. But credit does not operate in a fast lane and vein. It truly takes time. I remember when I was at a six or a low six, and it took years to get to where I am now. I tell God, thank you. But, and there was so much that I've said before, I did not understand about credit. And I think sometimes that's what makes people get frustrated in the
Mhm.
process and just want to abandon it. And that's what makes people feel like, okay, I could just stop right now and pay this off. And then my credit is everything is going to be clear. Or they've heard people say, I can negotiate this and I can do that. And they just going to take it off and it's just going to be gone.
Correct. Correct. Well, for the defense, like I tell anyone who comes in contact with me, there's no judgment because, for one, credit you can't learn overnight.
Mm-hmm.
It is a game. It's a
Come on.
double-edged sword game. Either you play the game or it plays you.
Oh, I
So
love that.
it's about what part you want to take place in, you know. And I tell people it's like your body. If you don't feed it, it will not grow.
Mm. Listen, I don't want anybody to miss it. Hold on, let me add that up there. Either you play the game or the game plays
Plays you.
you.
Exactly.
And you
So
have to have strategy and the right players on your team to help you be able, because a lot of people, Ty, I know I have sent them to you and you have consulted with them and they're like, oh, I can do it. And
mhm.
it doesn't happen.
Yeah, I mean, that's the thing. And I don't want to just target our community, but it is noticed in our community that the most important things that we need to get to the next level, we try to self-educate. We don't want to
Mm.
pay a professional who knows the moving parts of what they're trying to do. And one thing about credit, you can't self-educate and expect to get to where you're trying to get to in a short period of time. It's just like any course. that you take in school. You have to learn each moving part. It's a puzzle. You miss one piece, the whole picture just dissolves. It's not complete. And this the our community don't know about it because on purpose.
Come
On
on.
purpose.
Come on now.
Because it those 3 digits can take you to a whole nother level
Mm,
in your life, and it's just a whole nother walk of life. It's used in so many moving factors of things that we need every day. It's not just with getting money from the bank. It's also
mhm.
used to determine what they're going to charge you for interest. We was just talking about car insurance the other day. Someone
Yeah.
with a low credit score is going to pay 2/3 more than someone who has
Mhm.
perfect credit. So it's not just about getting a car, getting a personal loan, getting a mortgage loan. It's your everyday lifestyle that they're using credit for. So, yeah, it's on purpose.
I love that. I love that. So I know I usually get them first. So usually
Mhm,
the clients will come to me because they want to purchase, and we want home ownership for everybody who wants to be a homeowner for sure. But then once I'm looking at income and assets and all of the things, then I go to credit because I don't start with credit. I want to make sure that you're positioned and you have everything in line. Then we run into the bottleneck. And once I refer them to you to
mhm,
talk about their credit, I know I always recommend that they get a my FICO account, as that's the most, you've recommended it for me. I use it for myself personally, and I explain
mhm,
and I give the whole everything to them and I
mhm.
share it. But for that person who's coming, because a lot of times they say, well, I know I have a 530, I have a this, or I have that, I have some stuff, or I have challenging credit. Mentally, they're already defeated. What is your conversation with them at the very onset?
Well, first, I let them know this is a safe zone. There's no
Mm,
judgment. Okay. Someone can have a low credit score. I don't like to say bad credit, a low
yes.
credit score because of lack of credit. It's so many moving parts with
Come
credit.
on. Mm-hmm.
I like to identify where the issue is. It's either money management, not understanding how to use the income that you have, or
Mm-hmm.
it's a lack of money. So we have to determine. So if it's a lack of funds, you're living 99% of, to your means, then we
Mm-hmm.
have to go a different direction, which is debt elimination, if that
That's right.
makes sense. Because if you're not in a position to invest in what is negative on your credit, you're throwing away money. This is why
Mm,
I turn clients away every day. You have to be in a position to invest because it's not a overnight process, So I first identify, why is there a low credit score? Is it education, or we truly need to start working on debt elimination?
mm-hmm.
And once we identify that, because people don't understand, when you start getting your money under control
Mm,
and apply your extra funds to your credit that is derogatory, automatically your score gonna go up. Automatically. Because now you're feeding your profile with good habits and not just letting bad habits keep repeatedly hitting your score every month.
I heard discipline.
Yes.
I heard a lot of discipline.
Yes.
And again, when we're looking at this process, and I'm so grateful that you start with this is a safe space, because one of the things that I do in the pre-conversation is I'm building rapport, relationship, because I need the clients to be honest, because I don't want to find out things down the road. I would rather know everything, as we said in the title, the good, the bad, and the credit score. I want to know it all, so it helps me know which direction we go, which loan product, which lender, like all of the things, so that I can do what I need to do. But I need a person to be honest. And then be prepared to be disciplined. And I know those clients that have been disciplined and they followed the game plan. We have had so many clients, single clients and families who
Mhm.
followed the plan and they were able to purchase in a shorter time than they even thought. But
Mhm.
sometimes, as you have indicated, it's different things that are impacting your credit. It could be lack of credit.
Mhm.
So, if I'm chat GPTing and Googling, that's not going to necessarily show
No,
me exactly where I'm going.
it's not. Like I said, anything we share is free. We can Google it, right? But it's about the recipe. What is right for
Oh.
your profile? You cannot add everything that you see on your profile because you're not addressing the illness of your profile.
Mm.
So that's why, just like when you go to the doctor, if you don't feel well, you go to the doctor and they do an evaluation and then they pinpoint why you're not feeling well. And they give you a prescription. And that's how I see myself. Let me do the diagnosis. Let me give the prescription based off your profile. Everybody's credit file has its own DNA. So you can't use standard letters.
Mm-hmm.
You can't add all these different credit boosters that you see floating around the internet. You can't do that. You have to identify why and the purpose of why you're trying to use your credit. That's another key thing. In your case, people are trying to do things in real estate, and people don't understand you have so many credit scores.
Yes.
And depending on what you are trying to accomplish, what you're trying to gain with your credit, determines what we need to address on your credit, if that makes sense.
It makes perfect sense. So I want to make sure I put that up there because some people, when they talk to me, they'll say, "Oh, I looked at Credit Karma and it said X, Y, and Z," or "I looked at Experian or whomever." But I wanted to go back because you said something very critical. Essentially, when we're talking about credit, we cannot address the symptom. When we're just Googling and going out there, that's the symptom. But
Mm-hmm.
you need that diagnosis. You need that true prescription. That's the root cause. If you don't address the root cause, if you don't identify, hey, I'm spending too much money. Hey, I
Right.
don't make enough money. Hey, I'm doing XYZ, or I need to. So now I know, hey, I need to get another job. Or where I am with this job, I shouldn't be spending 90% of my income. Or,
Correct.
hey, I've shopped online too much, or I've door dashed too much, or I've done whatever it is too much. Because you can see when I pull up the assets, the bank statements, I see the Zales, I see
Mm-hmm.
the all of the things, the what are they called? The Klarna, the Affirms, the all of it
Yes.
pops up. And that's why I tell people when they say, well, do I need, is it a hard credit pull? Yes, when you're purchasing a home, because I need to
Mm-hmm.
see the complete picture
Correct.
because it's not just your score that will determine if you're going to get the home loan. I've had people who had a 670 and we flipped it every way we could, structure wise, and couldn't get an approval because they didn't have enough credit.
Right.
They hadn't had their credit long enough. So that was a different route, avenue, and conversation. But
Mm-hmm.
understanding the different scores is real critical. Like there, I mean, I know what I'm looking at. Your thing is wrong. No, I'm looking at a tri-merger mortgage score.
Correct.
Very different from what you're looking at.
Mm-hmm. 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 And yeah, you have to also let people know that as well, because not all creditors report to all three bureaus. So that's why
Mm.
mortgage lenders do the tri-merge to see the everything. You can't hide. You can't hide from us. We want to see everything. And when people are trying to purchase real estate, that's when I have to tell them, like, even though you grown, you not grown. You're gonna have to be told to do some things to get what you want. And like I said, I love the free resources out here. Credit Karma,
Yeah,
I'm
for
not
sure.
gonna really badge it too bad, but it's not showing you the true scores that matter for you trying to purchase a home. That is an educational tool. You get what you pay for it. That's free. My FICO is not free because it's what lenders are using to determine your credibility. So why not compare apples to apples? that's the biggest pushback I get from clients that, oh, I don't want to pay for credit monitoring. Well, you don't really want to see how somebody judging you, and I tell people all the time, you always worrying about what the internet says, your mama, your daddy, your cousin, your uncle, your girlfriend down the street. Ty want to know what the bureau's saying to the bank when I need to get some funds.
Come
You
on
know,
now.
so that's more important to me. The credit bureaus and the IRS is what's most important to me. But you have to make sure that if someone is going to be sharing information about you, that is 100% accurate, true. You know, um, it is so much we can talk about, Katrina, because it's like
Listen.
it's really like a I feel some people with low credit, they feel entitled. You know, you have
Mm,
to understand, a lot of people don't like their credit pull because it's going to tell what they are not showing right here.
I got you.
You know,
Oh, for
you
sure.
you cannot expect Katrina to sign off on a six-figure
No.
loan if
Mm-mm.
you can't even pay off your $300 Capital One credit card. You
That
know,
will preach.
I tell people all the time, when they call me, well, Ty, I don't see why I'm not approved. I said, well, do you know me? They say no. I said, well, give me 100K.
Ooh, I like that.
Once you change the seats at the table, it starts to be like, you're right. Now I need to do exactly. So it's, take your emotions out of it and put yourself on the other side. And would you continue to give your friend or family member or stranger
Mm.
money if they never pay you back on time, or they stop paying you in general and get ghosts, so you have to, that's what I do in my classes. I actually remove the emotions, and people can see clearly you're right, because people feel like they entitled to it because they know them. No, you can't do that. A
Mm-mm.
decision is made off you from what's in black and white,
That's right.
and no lender is going to sit here like me and Katrina and listen to why you have these things on your credit. They're going to see, okay, yep, this person don't pay their bills on time. On to the next.
Period and point blank. Because listen, I tell people all the time, your money shows your ability to pay it back, your income.
Yes.
Your credit shows me your willingness. And when it's showing all of these when I pull a credit report and the red just jumps out, it makes you kind of pause and have have some very tough conversations, but some
Mhm.
honest conversations and genuine. And I remember one of our clients that we shared, they articulated it so well. They were like, because you all, being it, you and I, took the time to really educate us in the process,
Mhm.
and we knew you gave your time, we didn't want to disappoint you. They were
Yeah.
saying like they saw us as their big sisters, and they're like, we don't want to
Yeah.
disappoint our big sisters because they have taken the time to sit down. And I know, and they were younger on the spectrum, but when I'm talking to people, a lot of times, they'll say, well, I need to bring my mom or my dad in the fold, and let's bring the family to the front of the
Yes.
table so that we can have the conversation with everybody, because there are so many misconceptions about credit, and people get real antsy and real just embarrassed about it. But it's
Mhm.
nothing, it's a sign of strength when you're getting help,
Yeah.
because it says I'm ready, and I
Mhm.
don't want to hide behind my credit card usage. I don't want to hide behind any of the excuses. I
Mhm.
need help, because if you could do it on your own, it would be done.
Right. Exactly. I agree with that. I definitely agree with that. So when people look in the
Real
mirror,
talk.
I, will-
Look, I'm
I
about
have
to
to I
look
have to
real
make
talk.
sure how I say this. When people look in the mirror and accept what's in the mirror, they see results. It's just real simple. I
Yeah.
am a very uh how can I say, I am like Chick-fil-A to credit, but at the same time, I'm going to hold you accountable. If you say, hey, Ty, I want this house at the end of the year, I'm going to be on you because I'm holding you accountable for what you say you want. You should be in that house.
That's
No
right.
one's better than you. So why not get to it? But people don't want to take the steps. They want to take the leap. You
Mm.
no. I understand what's the statement? Take a leap on faith.
Mm-hmm.
All right, but you gotta have some
Yeah.
prayer and some strategy with that
Listen.
leap.
Hey, try Jesus and a financial coach.
Exactly,
we
exactly.
gonna we gonna get you there. So with that, you just said something. If a person is overwhelmed right now and they're like, you know what, I think they're talking to me, because people get to watch the podcast recordings at whenever they watch them at night,
Mhm.
whenever, and they're like, oh my God, this is me. What is the very first step that you would have a person take coming to you?
The first step is definitely the My FICO. We already know that's clear. And then after that, we analyze. And one thing about me, I just don't send information to people. I like to have a Zoom so you can see what's on the screen. I want to make sure you understand what is a credit report, what information is on there, and why it's showing the way it is. If you don't understand that first, we can't do anything else. You have to
Mm,
understand that. I make myself accessible for any questions that this person may have. After that, once we identify what the issues is, we come up with a strategy that's best fit based off your income. You know, everybody can't pay off credit card usage right out the bat. So we come up with a strategy that's going to get you to that minimum. I don't like to talk about minimum, but one thing I love about real estate is that you can get approved for a home or properties quicker than you can get approved for a credit card.
mhm.
So why not leverage? What I say this was the game.
Come on now. Hey, listen.
To get the things that you can get with a lower credit score. So, yeah, it's about where I need to educate the person. Now, if it is
Mhm.
income, money management, we go over a debt elimination strategy. I like to do the snowball effect.
Me too.
Let's go ahead and nip these small things out the way. I educate people on how to determine which accounts they need to pay because timing is everything. With credit cards, you have statement dates. People always focus on the due date. No, your statement date is the date that they report the balance. So if we're trying to chunk that down so we can increase your score, we need to make sure we're making payments around your statement date and not your due date.
Mm. That was a nugget. I hope y'all got it. Statement date, not due date, because most people live by the due date. They get those
Yes.
bills and it's like, okay, it's
Yes.
due on January the 5th or whatever the 5th. I'm gonna pay it as close to the 5th. Well, at least I got some days after. You don't want to pay it
Yes.
after. Get
Right.
ahead of it.
Exactly. So if that's based off credit and it's for the credit card usage, that's just one tactic. But if
Mm-hmm.
you're running over your debt to income ratio per Katrina, hey, you too far debt income, right? So we look at the things that has the highest monthly installment payment. And if
Mm-hmm.
there's a way that we can pay that off or eliminate that debt, that's the account we'll be focusing on if you say, hey, Ty, I only have XYZ each month to allocate towards my debt. So we prioritize what is most important to get your mortgage and also the amount that you're trying to qualify
That's
for
right.
done in the same segment.
That's
Because I
right.
tell people credit is just, I call it the master key. It opens the door, but all the other things that Katrina need, proof of income, employment, that's what's going to keep you in the room and at the closing table.
Mm-hmm.
So why
I
not try
love
and
it.
address everything at the same time?
So I know, but how do you keep clients motivated as they're going through? Because Ty, real talk, some people are ready in 90 days. Some
Mhm,
people, it's really going to take them 12 months, and some will fall anywhere in between. And it also, as you have indicated, it's going to depend on your resources. So if you
mhm,
have the money and it's a matter of paying down debt and you can do it, then you're going to go ahead and take care of it a lot faster. But building, and then we have people who co-sign. Some of that we can eliminate and alleviate if that person is truly paying for the debt, and you can show 12 months where you have never paid for it, and it was just you co-signing for someone. But you got to be careful with that too, because if they
Yes.
pay late, it's hitting your credit report. And I
Yes.
had so many people say, "Well, it's not my car. I just co-sign." When you co-sign, you say, "I accept full responsibility, just like my co-signee, the other person. We own it together." So you take the good, the bad, and the hit on your credit score.
That's true. That's true. So you have to be careful when you piggybacking or trying to be nice and help a friend. Um, but at the end of the day, when you are co-signing, you're also taking on, I tell people, even though it's partner, it really means each partner is taking full responsibilities for everybody's action. So you be careful, on co-signing. It's the same way with authorized users. Like I said, we can get so far
Yeah.
in the weeds with
Yeah,
credit.
I want to understand, because I know we're almost at the end, but tell us about authorized user, because so many people do that, but it's not always beneficial.
No, it's not. So with authorized users, you're piggybacking off someone else's credit profile. Okay. So it's one account. So each account you can piggyback off of. I recommend no more than two authorized user accounts on your profile, because after that, lenders start seeing the suspect. They see, oh, this is really
Mm.
not your credit. You're just riding somebody else's coattail. However, when you are authorized user on someone else's account, their behavior, whether it's good or bad on that account, shows up on your profile. So it
Mm.
may not benefit you. So if you're piggybacking off someone who uses that credit card every day, all day, every month, guess
Mm.
what? Their credit card usage is going to transfer onto your credit profile, and it can possibly drop your score. I see this all the time. Or if they miss a late payment, guess what? It's going to show a late payment on your credit. And
Mm-hmm.
just being removed from that authorized user doesn't always take it off your credit profile.
Oh, say it, say it, say it.
So
Yeah, we
people
try to
have to
jump
be
in and out
very
like double
careful.
dutch. Mm-mm.
Correct, correct. So I tell people you can do the friends and family freeway, or you can actually purchase an authorized user where it's guaranteed these card holders
Mm-hmm.
are not using their card. Also, you have to know the algorithm of your credit profile, because the age of every account, it's
Mm-hmm.
an average of how long you had accounts open on your credit profile. So it can affect your age. So if you get your friend and they just open up a new credit card, guess what? And you ask to piggyback off of that, it can lower your credit age. And guess what?
Mm-hmm.
You just drop your scores temporarily until the first on time payment is reported on that card. So you have to make sure whoever you're riding the coattail of, they have a
Mm-hmm.
card that has at least been open 5 years or more. That's why I preach that, because it's going to affect your credit age. Anything
Mm-hmm.
you do, adding credit onto your profile from someone else, it should be a benefit to your file. So just be careful with that. You just can't say, hey, can I get on your card? No. Oh,
Mm-mm.
or they say, oh, well, my mom has a 800 credit score, and I know she fine, but then they get on the card that she uses every month. It has the highest credit card usage, and they wonder why their scores didn't go up. So that's why you have to look at your situation by itself.
I love it. I love it. Listen, we are almost at our end. So if there's a
Already? Oh
we're
my
already,
God.
but listen, this is so we're gonna carry over to a part two, because it's just it's more to talk about. So this is just the good, the bad. We're gonna talk about this other conversation for next week. But don't worry. What message do you have for the person that's watching right now and they think that home ownership isn't possible for them because they know that they have just not been a good steward of their credit.
I would say don't beat yourself up. If anything you really want, you always get. Okay.
Mm.
And low credit scores are temporarily until you start working on it. So whether you do it yourself or contact a professional, you should be able to use the education that you learn and apply it to your credit and see results so you can start getting qualified for a home.
I love it. I love it. Thank you, as always, for pulling up a seat to the closing table, Tye. And we are gonna come back because we want to talk about it. We want to be able to speak to the person who is just really struggling, because you and I together, as we talk consistently throughout the week, we deal with a lot of different people in a lot of different tax brackets,
Yes.
age brackets. And I want everybody out there to know that you are not by yourself. There are people who you see on TV, people who you see making all of this money, who are making it rain. Their credit, they can't get approved for a home loan. But we're going to help you. We want to help you. We want to make sure we get you to the closing table and beyond, not just one closing table, but multiple, being able to buy your primary investment properties and being able to build true wealth. So please join us back at the closing table. Tye, I thank you for being with us today, and we will
Thank
see
you.
you next week.
All right.
So, ladies and gentlemen, I hope that you were able to grab some nuggets from this episode of Closing Table, and make sure you plug back in, because we need to stay right here as we're talking about money and credit and which direction that we're going in. So, I love you. There's nothing you can do about it. Make sure you tag a friend, share with a friend, and tell them what you've learned today. Like, share, and subscribe, and we will see you back at the closing table next week. Have a good day. Peace.